Now we'll have our second panel of the day with Gísli again, with Haynes from Zeal and Itamar from Argent, would be moderated by Coco, Head of Growth at Orb Labs.
Hello, everyone. Good afternoon. My name is Coco, and welcome to this panel on building the next neobank with us. My name is Coco, and then I work in Orb Labs currently, and it's Head of Growth. So I will ask everyone to introduce yourself and then what company what you're building right now.
So I'll start. I guess you know me. I'm Gísli, the co-founder and CTO of Monerium. I got early into the space. I first discovered Bitcoin in 2013. I was actually furious when I learned that this technology had already existed for 4 years then, and I thought I was late to the game. Evidently, we're all early still. When I discovered Ethereum, I immediately understood that we had the capabilities to rewrite the financial system. I used to work for a small bonds boutique firm, and I was always on the technical side. So, and it was a small company, so we had we were mostly the front office, the middle office, and almost the back office. So I got a first-class seat into how securities are actually settled around the world, and you would be amazed how it works in TradFi. So I have no question, no doubt in my mind that what we're doing here is super important, and with OpenFi, it's only going to accelerate the journey that we're all on.
Hey, my name is Hannes Gray, or Gradient in the Twitterverse, and I work with Zeal, which is a self-custodial wallet, or I should say an OpenFi wallet, a wallet that lets you use your crypto in real life. My street creds prior to that is working on a classical neobank, Revolut. And so we've been reinventing the front face of banking at Revolut, and now doing a self-custodial wallet is the opportunity to not just reinvent the front, but also the back end of banking with other builders. And so Zeal is, it's an iOS, Android, and desktop browser extension app.
Hi, I'm Itamar, one of the co-founders at Argent. So Argent is also in the wallet space. We started 5-6 years ago, thinking the future of finance would probably not include a post-it with a seed phrase. I would say co-invented probably with Gnosis at the time, a kind of abstraction. So we were the first smart wallet for retail. And our journey from there has been a long path on scaling. Ethereum couldn't scale. We're paying gas fees for users 6 years ago. You can imagine how it went 4 years ago, where we went from $1,000 bill a month to $1 million bill a month. Then we made a big bet on ZK. We are now the largest wallet on Starknet, with desktop, mobile, embedded wallet also, and multisig.
Got you. Thank you, all the panelists, for introducing yourself. A little bit background for me, it's that I work in Orb Labs. We work on chain abstraction, a lot like multi-chain. And what we want to facilitate is also this OpenFi concept, working on the back end, just to make sure everyone can use anything that's on-chain smoothly in real life, regardless what chain they're on. So I guess the first question that I have for everyone is that the adoption rate of neobank, it's around 10-20% around the world, I believe, and in a mostly developing country. And what do you see as the biggest obstacles in the adoption, and how do you think crypto can increase or help improve that experience for users?
I can maybe take a stab at this one. So as we alluded to earlier, I mean, we've been building the infrastructure, right? And I think we're at a place, and I think the other panelists agree with me, where we have the capabilities to have cheap transaction fees, globally available, all of that. Now it's really about these guys here. Like, it's about the user-facing applications. We really have to get to a stage where we don't talk anymore about the infrastructure, but how good of a product this really is. And I believe, and I've been gauging sort of the interest in other speakers here at ECC, at DAppCon, etc. And it really feels to me that we're sort of at an inflection point when it comes to this. Because I see new builders in the space who are more focused on making things right, creating a killer product rather than talking about bridging or scaling or whatever.
Other panelists, you have any thoughts on this question?
Yeah, I think it's an exciting time when a lot of the building blocks are in place to create consumer solutions. I mean, I'm afraid of those $1 million a month Ethereum builds a couple of years ago before scaling solutions started to get in place. But now we have the scaling solutions, we have the ramping solutions, so a lot of the critical building blocks are there. But they're also just the table stakes to be able to then build better experiences than in Web 2. So when we had those, people are not going to come rushing and say, oh, now I can finally on-ramp for free. It's like, no, that's table stakes. And then we have to build great experiences on top of that, value propositions that are compelling and even beating Web 2 experiences. And that's the next big game now that the fundamentals are in place.
So I think on your question first on the limitation of neobank growth, I think my view from maybe a UK-centric view, and I know a bit more Revolut than others, I think at the beginning they were ultra differentiated. It was really unique, like on FX, for example, solutions were really bad. And I think two things happened. One is other banks have caught up. I feel maybe a bit less in the UK, but I'm Belgian. I see in Belgium a lot of people are happy enough with the bank, so neobanks don't give the 10x delta. And then I think there's an issue of trust. A lot of people would use, you can see in UK, Monzo, Revolut, their fight is to get your salary paid there. People don't trust them yet for the salary. I will put a 1K, 2K, and then do specific thing, or usually around FX. And so trust is an issue, and then 10x, being 10x better at something. So if you look back at crypto, I think we have a massive challenge around trust. We are clearly not making it easier because it's not the trust of the bank going away with your money. I think it's more they will collapse, something will get wrong. In theory, crypto is better, but I think in the mind of users, it might not be. I do think being 10x better at something is better. We are well positioned because it's open. There's way more innovation. While neobanks could only deal with duct tape to try to make things a bit better, but they couldn't change the fundamental underlying infrastructure.
And maybe one more thing that I think crypto is going to solve. We see it a lot. We have, builders like Hannes here building on top of our infrastructure. We have, product people from X, product people from PayPal and Venmo. And they told me a year ago that if they wanted to push out a new feature, they would have to liaise with over 500 persons globally to be compliant in all jurisdictions. So if you contrast that with somebody who's building on top of stablecoins, like Monerium, we take care of the compliance. Now your mission is just to create that user experience, right? And you can have like a 5-person team innovating very fast to create that product. So I think that is actually going to accelerate how fast we get from talking about infrastructure to actually having user-facing applications that will change user behavior.
Yeah, that's a great answer. So I think on the topic of compliance, it's very interesting, especially when we're talking about neobank. And what is your difficulty mainly, especially for Monerium, when it's like a compliant stablecoin currently? When you're talking to all these regulators, what concern do they have? And as a wallet, do you also feel that type of pressure when you're trying to adding on like on-off ramp functions or real-life use cases?
So we definitely do not have the kind of compliance challenge that Gísli here has, and we don't want. I think we're not wired to be able to deal with that. So I'm extremely impressed. We do see increased pressure. We have to monitor constantly. We've started seeing some limitation on some things, like some on-ramp that would be shut down in some markets for us, etc. I won't even start talking about Apple position on crypto. So I would say we are the least exposed to compliance, yet we're starting to see the start of it. So it will likely impact non-custodial wallet. Probably not with Mika even 3, but it's coming. It's in the coming year. In the next 5 to 10 years, non-custodial wallet will definitely impact it. You see MetaMask now being sued by the SEC. I don't think this specific lawsuit will go through, but yeah, we will be targeted.
So we've become experts on compliance. So it's been a long journey. We spent 2 years talking to the regulators when we got the license finally in 2019, the first EMI to issue tokens on a public blockchain. And at the end of the day, like, the regulators are people, right? And they just want to do their job and make sure that they and we are following the law. And what kind of surprised me, because I was always asking myself the question, what is enough? Like, how much compliance do we need? And at the end of the day, the answer is, you have to prove that you're trustworthy. That is the answer. And so, like, once we kind of understood that, we went above and beyond to explain things to the regulators. They're also on a learning journey, just as everybody here, right? So I think, like, this, you need to have a lot of resilience. You need to show them the way, essentially. I think it was Julian earlier who said, like, we can take our tools and integrate it into their law, right? And I think that is the way forward. Like, there's so many things that we can improve on with KYC and others. So we have to, educate the regulators to get the right results.
Yeah, I think showing that we are useful for not just casino use cases, but that we are broadly useful in the normal economy where most of the regulators operate. Then we have a strong argument for saying, hey, let's do this positive thing together. And that's taking time. It's new technology, not just for technologists, but also for regulators. But similar to Argent, we're a software developer. Zeal is a piece of software. Think of it like a Louis Vuitton wallet, but with bits instead of leather. But regulators will regulate in some way or form. But I think something is moving every day, right? We need to stay on top of it.
And I have a question specifically for Hans, just because, like, you worked in Revolut. And how do you see the experience of building in Revolut differ from building Zeal when it's very similar type of product in some way, but one is on crypto, one is on fiat? What do you see as the biggest challenge as well?
Well, one clear parallel is Revolut is an EMI in the UK still, and has a bank license in other jurisdictions, but is probably larger than anyone expected an EMI to become, right? So also worked within a regulatory uncertainty of a new regime. And that's basically what us wallets are doing as well. We're building new products within an uncertain regulatory regime. But same in that how Revolut becomes eventually regulated as a bank in different jurisdictions, will also end up being working within some kind of more defined regulatory regime. But how long that takes, I think still to be seen.
And as I introduced myself, I am more familiar with the cross-chain space. And do you think that there are certain chains more suitable for this type of operation of neobank, or should it be cross-chain essentially? Because I know that you guys work with Gnosis really closely, because that's essentially like a lot of Gnosis Pay and infrastructure built on. But what do you think when wider user, let's say they are trading on Solana, another thing, like how would that bridge over to the user experience in general?
So I don't really know how the multi-chain thesis will pan out, but I guess we will have multiple chains for years to come, right? And we have to figure out solutions to that. From our vantage point, what surprised us the most was, or let's say the biggest need for us to be able to service other chains is actually a know your transaction integration. Because as we stand in the sort of, as we kind of bridge assets between the two worlds, we are on the hook for making sure that all the funds are compliant and are not originating from in a hack or an OFAC sanctioned list address or something like that. So we rely heavily on those products, and those products haven't built up support for many of the chains that we would like to support. So that is definitely a limiting factor, and I'm just calling out to those companies to support those chains as well.
Over a long enough time frame, we need to abstract the chain, right? People don't really want to care what data infrastructure they're their dollars are being stored on. But still, in the short term, we do need to navigate between different chains and make different bets. Now, there are several different options where you can basically have a transaction fees converge with zero. I think you probably have the most educated opinion about managing expensive networks and not.
Yeah, so I think we like to go with the contrarian view. So we went the opposite of multi-chain. I think the way I see it, it's dangerous for a company. We are very exposed to one ecosystem, but we are so far from having built a solution that is useful to a meaningful amount of people, that adding the complexity of dealing with multiple chain, you end up playing defense. I mean, we were spending 80% of our energy with Argent abstraction on EVM. 80% of our energy was making dApps compatible, dealing with dApps that were not, educating them on how to support smart wallet, etc. We moved to Starknet. It's not EVM. The tech, I mean, it will be the only L2 that can compete with Solana this year on scale. We're talking probably 1,000 TPS on transfer. It's super cheap. Every idea we have, we can build it. We do 80% product, not education. We want to build the new smart features. We have instant adoption by dApps. We can really push forward to our vision and not worry about it. And maybe in the future, once we have cracked that, we can go back to other chain. I think the main issue is more that players are spread. So, you know, we'd love to work with Monerium. You're not there. Let's talk about that. No, so it's more having, we want the best of every categories to work with us, but they might not be on our chain. So how do we get there? Yeah.
I'd love to take that conversation forward. We are blockchain agnostic. It just happens to be easier for us to support EVMs. I cannot announce it yet, but we'll be launching the first non-EVM support later this year. So we're sort of, getting our hands dirty, if you will, with other ecosystems as well. So
we can help.
Yeah. You can help. Yeah, thank you.
Zeal is multi-chain, all EVMs. Safes are deployed on 10 different networks. And we do spend some effort in making sure that assets travel seamlessly for the user between those chains. So we'll on-ramp USDC for free on Polygon, but then you can spend it with your Gnosis Pay card on Gnosis chain, and making that thing work atomically with a transaction and not 58 transactions is part of putting good cosmetics on top of a lot of plumbing, which historically has been heavily revealed. And yeah, it's maybe cosmetics too gentle, more like plastic surgery sometimes.
And my last question would be, what do you see in the future of crypto in the, let's say, coming 3 years, not too long term? The adoption of it, whether through neobank, whether through like your payment system, or whether it actually through other things like an NFT frenzy again back then, or the meme coins. So do you see neobank as a catalyst? And if so, why would people care a lot?
So what do we want to see, or what do we
Yeah,
think
yeah.
will
What
happen?
do you think will happen?
What I think it will be another probably quite meaningless use case that will create the next frenzy. I don't think neobank will be the one driving that. I think the challenge we have is we won't be a better neobank across the board at everything. So we need to find really a huge pain point where we can be 10x better. And I feel it's the first year that I start seeing them like around cross-border, where I see real people, real companies making cross-border payment just because it's better and they are not from crypto. And so there are areas, yield, but we'll see what's sustainable yield or not. I even see the weirdest part for me, for example, this year I see RWA is launching traditional finance product that you cannot access in traditional finance. So you do in Web3 to get a more exotic product that only sophisticated investors can go in Web2. So Web3 makes a Web2 product really more accessible. So we need to find what's the wedge that gets us there, and then maybe we'll have this explosion of the next DeFi neobank, OpenFi neobank.
Yeah, I guess what drives the next wave versus what's the most exciting are not necessarily the same question. What I'm really excited about, and what I think is actually happening now, is finally delivering on like a 15-year-old promise from Bitcoin to do peer-to-peer digital cash. It's still very hard to just send digital dollar to someone's email or phone number. But now, actually, that is happening. We have all the building blocks in place that we can orchestrate and put in place that you can actually have peer-to-peer digital cash. And so payments finally happening. Both as connecting to traditional rails or on-chain peer-to-peer, all different shades of payments, basically.
Yeah, I agree. I am kind of bullish. Maybe I'm just a naive optimist. I guess you have to be when you're in this field. Yes, it's likely that there's some meme coin going to be the next for the next 3 years. But as we kind of progress on this OpenFi vision of bringing all the assets on chain, we are taking care of the fiat currency part. That alone is not enough because most payments are actually settlements. There's another asset going in the other direction. And so far we've had cryptocurrency, and that's great. We love cryptocurrency, but it's not going to, I think, reach mainstream users, my mom and dad's, right? But as we get further and further and bring securities, ETFs, tokenized basically everything, I think we're going to see some real, I don't know what they'll be yet. There will probably be a small team that kind of figures something out that you can do better, more efficient. And I would say in the next 3 years, I'm quite bullish on not necessarily neobanks, but like somebody figuring out how to put this all together and present it to the user in a way where it makes sense, and they don't even know there's a blockchain behind it. Like they won't care because it's just so much better.
Does it mean that you will see the current neobank adopting this as a main driver?
That is a very good question. I don't think so, to be honest. Because as we've seen with other trends, when Google was disrupting the internet or Facebook, they had a thesis and that played out for them. Now they are the incumbents, right? And they have shareholders that they've convinced about ad spending on chain, online. So I don't necessarily think that you'll have the old neobanks kind of pivoting, but happy to be proven wrong.
I think regulators will make sure it doesn't happen.
Probably,
basically.
yes.
They're on our side there. Yeah.
I love how we talk about old neobanks, but yeah. I mean, HSBC struggles to shut down all their offices and become a mobile-only bank, right? Not saying that necessarily should, but that's that this story has happened before. Neobanks have a lot of infrastructure in place in a very monolithic way, which this new era of neo-wallets or neobanks don't have, right? So there's just a lot of incumbent infrastructure that's difficult to do something about. But there are several players that are making moves in crypto, but it tends to be more exposure to the volatile asset versus being crypto, as in using the infrastructure.
Got you. Thank you for all the panelists for joining this conversation. So that will be the end of this panel, and I'll hand it over to
Thank you.
Thank you.
Thank you.